All righty, I'd like to welcome everyone to the Hurley Investments Financial Services Commentary for Tuesday, May 23rd. Last week's, hopefully you received via email the link. It was a little quick, but I can't remember the reason why I wasn't able to do it last week. But ended of school, so things are starting to be where my kids are going to get a little more daddy time. Starting off today, we talked last week about doing the VIX vertical, and there was a point in time for one quick day the VIX jumped up to 16. Taking a quick peek at this trade, I'm going to give you a couple hints here. What was my cost basis on the trade? What was my cost basis on the trade? Okay, we've got a couple that are $1.26. That could be used as well. $1.2631 per share. Net value of $44,980. Yes, I am in this trade myself. Am I profitable today on this trade? Am I profitable today on this trade? Roy says yes. David says yes. Okay, if my cost basis is $1.2631 and the mark or the current trading price is 102.5 cents, I'm actually down about 24 cents on the trade. On one single day, we could have gotten out with about $160 of profit. And the next day, when it opened, I couldn't even sell it for $1.30. So no, right now, Roy and David, the trade is not profitable. Couple quick questions. Does that mean that it won't be profitable? Does it mean it won't be profitable? All right, I see a couple no's in there. That's correct. And you know what, Lance? If I can read your comment, I'm going to read that one. Actually, I'm going to read Maud's first. Yes, because this market keeps going up. The neat thing is this has nothing to do with the up or down of the market. It just needs some fear. And Lance, I'm going to use your comment. No, it doesn't mean it can't make money. You just need a catalyst. And that's correct. The catalyst can be a bunch of different things over the next month. I really need that to happen before our June options expire. Catalysts that I see in the future. Unfortunately, one of the catalysts could be the terrorist events that are occurring over in Europe. Pretty freaky that they just put their DEFCON number to critical, where they believe that their terrorist attack could be organized, excuse me, and more terrorist attack can occur in the future. That's basically saying the next terrorist attack, you're going to see the markets probably overreact. We have Fed minutes and we have a June possible rate hike. That is another possible catalyst for our markets to go through. Hey, we have a president that just needs to send out the perfect tweet. Reason for our markets to overreact. Hey, we've got Comey, the the past FBI director that's going to come and speak about what's happening between him and Trump. There's plenty that's happening, and there are actually two comments here. Why didn't I take my profits in the past? I didn't have a baseline. The short answer is I didn't have a baseline, and I thought things could get worse. If I go ahead and pull up the VIX right now, I now have a baseline. Twice I can judge, if not more, that really 15 and a half, anytime it trades over 15 and a half, I have the expectation that I need to pull the trigger. I now have a baseline that I can use. By the way, if it gets down around 9 as an adjustment to my trade, I might add 2 more long-term contracts. Mod, I don't necessarily next time need a follow-through. I just need it to be in this range where I can pull the trigger. And thank goodness I have that 12.16 in place. My break even is 13 and a quarter. It's timing. It comes down to timing. And I need some event again where the reason why I put the trade on, looking back in time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. 28 days of trading gave me the ability that as long as it's trading above 13 and a quarter, I can break even. As long as there is 13 and a quarter, I've got 28 reasons, 28 trading days, or roughly a 20% chance of being able to close this at a profit. Is there enough premium to sell a bull put spread underneath to help finance the call spread? I don't know. I haven't checked that far. In fact, if anything, I was more looking at a bear put spread also the next time it gets up to 16 to play the drop down. And again, it'll be a 16 and 12. I've got that range that I now have a baseline. The point I'm trying to bring across is I am shocked, and you can see it on the volume. There was so much VIX selling, I want to say last Thursday. Just mathematically, tons of people gave up on the spread. The trade was a one-day event. And even though they were out to July, there were a lot of August, there were a lot of Septembers, yeah, a lot of people gave up and sold their position, most likely, well, not most likely, a lot of them for a loss because they haven't learned to trade in a process. There are some positions right now that, plain and simple, we're struggling with. Zions Bank fell from $49, almost $50, down to $40, losing over 20% or almost 20% of its value. I made up half of it on the way down. Does that mean that I'm profitable on Zions Bank? No, of course not. But I can add 10% more shares of stock. Kevin, you know what? Zions Bank, a bad play to be in. It's rather interesting because, not that I like this gentleman's politics at all, but one of my articles that I have is George Soros. As I took a look, let's look at how many of his holdings are in financials. PayPal, Goldman Sachs, New Star Financial, Credit Acceptance Corp, Citigroup, the CME, Deluxe Corp, I don't know. Put Partners, I don't know. Visa, MasterCard, U.S. Bank Corp, Area Capital Corp, SVC Financial, S&P Global, MSCI, Global Payments, Lowe's, Computer Sciences, COB Holdings, Garner Group, and Equifax. 1, 2, 3, 4, 5, 6, 7 of his 2, 4, 6, 8, 10, 12, 14, 16, 18, 21. 1/3 are not. 2/3 of Soros's money is in financials. So, how well have financials done the last year? Let's just give it the last year. How well have financials done? Not particularly well, right? They had their move and then they stopped. There are a lot of people that are betting on, and there you go, Dave. Yep. Not as well as you would have hoped. That's a good way to put it. They had their move and then they stopped. Does that mean that they're not going to move in the future? No. You've got a billionaire right now that has some ridiculous holdings in some of these positions. It's funny though. I've got more Visa shares than he does. He only has 14,300, and I've got like 34,000 shares. um, I found it interesting to see that it is a bet on increasing interest rates. Good comment, Maud. It's a bet on the hockey stick, right? And seeing interest rates move capital markets significantly higher, and to do so quickly. And am I disappointed that I'm not profitable in Zions Bank and Bank of America? Yes. But that doesn't mean because it doesn't move in my time frame that I sell it off. It means I'm going to do the best I can to protect Bank of America back up at $27 to $28. It means Zions, next time it gets back up to 49 or 50, I'm going to take a real look at adding protection at a resistance level, not just at earnings. It means that, you know what, I can't time the market as well as I'd like to, but it doesn't mean the investments that we're in or that are down are bad positions to be in. It just means it hasn't moved yet. And you have two choices. You can sell out, take a loss, and make up some excuse on why the market's stacked against you, or why maybe I don't know. The short answer is you can make up all kinds of excuses, or you can be collar trading, make up some of the downward movement, and give yourself the ability to wait out some ridiculous moves and be able to make money as it goes higher. Once again, over the past week, I was a little shocked at how people still think they're trading the market on a month-to-month income basis, how they are ready to jump ship when none of the fundamentals have changed. Why? I don't understand. Investing was never meant to be day trading. It was never meant to be such a short-term thought process of being in the market. I talked to an individual who's been day trading for almost 20 years. And it was such an interesting conversation on the plane flight because you know what? He calls it an addiction. He goes, I'm addicted. And I said, addicted to what? Oh, I'm addicted to trading. And I asked him what his returns were. And of course, I got the expected lie. Oh, they're this and that. And I questioned him on it. Oh, yeah, well, I didn't do so well on that. And it was amazing because I had just read a second article that I left for you. And this one is, this is 7 Signs You'll Never Be a Millionaire. And it was interesting because what he said word for word, I want and I wish. I want and I wish things would be different. I want to be a millionaire. I wish things had been different. And as he went through, what really came out, well, when it really comes down to it, Kevin, you have to be just lucky. That's really the only way you're going to be lucky when it comes to day trading. And then his last comment, which blew me away, and I asked him, well, what are your goals for your money? And he just had that blank expression. So before he made up something else, I just sat there and I said, I just read an article and I'm going to forward it to you. I got on my phone and I gave him very politely 7 signs you'll never be a millionaire. And unfortunately, I agree with it. Too much emphasis on saving. I'm not saying saving is a bad thing, but we have all-time low interest rates, historically low interest rates, and people are telling me how they're trying to pile in to pay off their home. They're making double and triple the payments, not putting that in the market in some way, shape, or form. They're making double and triple payments so they pay off their house. I scratch my head. That's poor financial planning to try to to put triple payments on historical lows for your home when the market has moved the way that it has. They don't have specific goals for their money. They've got round, pie-in-the-sky goals. I want to be a millionaire. Well, crap, that takes a lot of work. It takes a lot of planning. It takes some investing. It takes weathering the storms. Some people haven't started investing. Some people have one source of income. I do think it's pretty important to be willing to look for different revenue streams. A lot of people rarely step outside their comfort zone. And again, some people think being rich is luck. They missed all the hard work that doctors go through. I know a couple of you are doctors here. Kudos to those that went to 4 to 6 extra years of school, did residencies. They're getting paid probably better than the average salary because these people spent 6 to 8 years working their butt off, going to school, residencies. They've done a lot to prepare themselves to make more money, to be able to save more money, to be able to invest more money. Kudos to you guys. There are at least 2, 3 in here right now that are doctors. You guys are not better off than the average salary because you're lucky. It's because you guys put the effort and the work into it. You did something that was hard, and you didn't quit on your first failed test. You didn't quit on the first thing that didn't go the way you wanted to. You didn't quit on the first time things weren't working out the way they were supposed to. So as I was going through, I'm not worried about this trade yet. And the reason why is I have Fed minutes, Trump tweets, terror, bad way to put it, terror in Europe, historical summer downturns. I could put quite a few things in here. I can put political unrest in Washington. I can have a failed health care plan, no tax plan. I've got quite a few things coming up that give me another 4 to 6 weeks, not to mention I have technical validations on my next moves. Doesn't mean that technical analysis, past history will guarantee future results, but I have more that I have today than I had a week or so ago. So I'm not too worried about it, and I'm going to obviously work my way accordingly. With that said, tell me what's happening this week and why. We've only had the new home sales today, which actually disappointed. 569 versus an estimated 608. But what's happening in our market? What's moving our market? Tell me what's going on and why. I want to teach you guys to be looking at the market and understanding it, even if it's just for 5 minutes a day, reading over some news. All righty. And I'm going to agree with you, Dave. Trump trip to Middle East, right? You're correct, Dave. A Trump trip to the Middle East where new business with Saudi Arabia and Israel, right? Jeez, come on, Hurley. What else is happening so far since we spoke last Tuesday? Can't type. Terrorist attack in Europe, and it could increase. Anything else? I kind of think we're missing something that's currently in place. What's happening in our market right now? Think about it. What's happening in our market right now? Earnings is over. Good comment. Still moving higher. Good comment. What's causing that still moving higher, Lance? There you go. David, you're on a roll today. Buy the dippers. I'm just going to say they're out in force, right? No one wants to miss the opportunity for a rate hike or for tax reforms, repatriation. Taxes right now look like it might not come through until next year. We have the health care that's got to be significantly revised by the House, or excuse me, by the Senate before it goes back to the House. We really have a lot of hopium in our market right now. But the buy the dippers are out in force, and unfortunately, who knows what's going to happen, to be honest with you. It's I'm not saying this right, but the short answer is there's a lot that there is a lot of uncertainty that maybe is not being passed over through the last, I don't know, I'm not saying this right, but through the last, there's a lot of uncertainty that you're not seeing that's actually in the market. It's just not built in through the VIX or through the option prices at this point in time. Will our market end this week? I'm going to suggest lower again. It actually did go up higher after we spoke last week, but we're back up to that 2,400 range almost on the S&P. Don't forget, we have a holiday 3-day weekend in the United States. We have Memorial Day next Monday. So most likely tomorrow will be the last volume day you will see in the market. And it wouldn't surprise me if it's not one of the better days. You will have the FOMC minutes, so you're going to see some people poking into when they're going to raise next. And you're going to have that in the news that they're probably going to raise quicker. With that said, durable goods on Friday. So my expectation is with low volume, you're going to have the FOMC minutes dominate tomorrow, and obviously durable goods, which probably won't be the best, along with GDP, right? Low volume, everyday people, I think you could see a little bit of panic, and we could have a bit of a down rest of the week. With that said, even though we're in a relatively flat May, if I can go ahead and pull up the Dow, move this out of the way. Relatively flat May. Yes, we are bullish again, but we really haven't moved any higher than we were the end of April. Heck, we really haven't moved any higher than we were the end of February. Taking a peek at the S&P 500, same thing. Bullish, but here we are going back up to a quadruple, or 5 times we're testing that 2,400. There are a lot of sell orders stacked up there, and that probably goes back to people buying in at 1,200, and they're cashing out at 100% return over an 8-year period of time. The ones that just sat and left it and didn't pay attention to the news or what was happening. NASDAQ technically didn't go bullish in the month, but we are still bullish on the NASDAQ. Way to go for the top 5. It's funny, I read an article that I listened to an article that went through the fact that there's not quite a difference in the top 50 as per their earnings from the lower 459 or 461, whatever it is, on the S&P 500. We are really truly being led by about 17 to 21 different stocks on the S&P 500 this year, which means in all reality, let's give it on the high side 21, they're 480 or more, 490, that are really not moving like you would expect to see them move this year. I am still expecting a 2.5. No, I am not. I should have changed that. We have a 0% gain, so I am looking for May to basically end flat. We have some Toll Brothers, an interesting one. Intuit was an interesting one for today. Chico's tomorrow. JS, what is that? JS SD. Can't remember right now, but remember Hewlett Packard's probably more important. PVH and Tiffany's. Thursday, Costco will be a bigger one. Best Buy, Marvel, GameStop, Hormel, Medtronics. Big Lots on Friday. For the life of me, I can't remember JST, but it's not a market mover. Economic reports, nothing really on the line except for durable goods. FOMC minutes again will probably move Wednesday. Durable goods, GDP, which probably will disappoint again on Friday on a low volume retail trader Friday. Internationally, all index. We do have GDP in Great Britain on Thursday, but I don't know if that's a bellwether. How am I looking to trade? I am looking to bull put, long puts, in past earnings collar trades. I am also looking, can't spell, looking to add summer short calls for income, which means I'm going to go out to most likely July short calls on some of my positions up at resistance levels just to create something for some income going out till our next earnings, which will start obviously most likely in August is when we're going to see most of our earnings. Three interesting. Soros has just had his losing bets against the stock market. Pretty interesting article. I got one from a student that said, hey, look at the May business conditions monthly. I found this pretty interesting on some of the numbers, and I haven't validated all the numbers, but I like numbers. The numbers don't seem to lie to me. And I like going to the numbers to see, hey, you know what? Gross domestic product rose at 0.7% annually for the first quarter, down from 2.1% in the fourth quarter. I recognize those numbers. I wanted to see the bits and the pieces of the numbers. You can see it. I disagree with the premise, and I think it's missing out on some of the things that are moving, which are the government, right? And then again, 7 signs will never be a millionaire. I'm just putting this in here because I think it's a personality thing. I think there's some things you can change if you say some of these or think some of these. There are some things that maybe will change your mind on what you see here. With that said, I've only taken up 35 minutes. Do you guys have any questions? And Dave, I know you're going to have a question, so let me go ahead and answer yours first. Dave was kind enough to email me earlier, and I'm going to go to the question section. And if I say this wrong, Dave, please go ahead and jump in and correct me. But as Dave wrote me an email earlier to go over the questions, his comment was, how do I sit and wait for technical crossovers on positions? And I'm going to go back and answer it 2 ways, Dave. Primarily, they're not an issue for me because primarily I'm not a options trader. It's frustrating for me. My mentality does not set me up to be a wildly profitable options trader. So primarily, I collar trade and use technicals to adjust the long put or short call. I simplified it. I'm making it simpler for me on not having to rely on technicals. If I relied on technicals and threw a bunch of long puts on everything the other day, on 1 day of movement and 3 days later it crossed back over, I would have screwed myself out of tens of thousands of dollars panicking when long puts or long options were overpriced because of the panic. Second thing, I use 2 to 4 days after crossovers to validate a trend change, which means the moment that I see a crossover, I don't start taking everything off and adjusting and throwing stuff on. I have been in the market almost 18 years now, almost 23 years now, where I see the changes, I see the movements, but it no longer causes me to make some knee-jerk reactions to a one day, even though it was a 300 point, which is a pretty big point movement, on a one day, 1.3% movement in the Dow, a 1.42 or no, 1.25% movement on the S&P, a 1.78 movement on the NASDAQ. I've been through enough that I don't have those knee-jerk reactions. So it's not that I no longer have the I'm going to say this politely, but I don't currently have the beginner trader mentality where anytime you look close to a crossover, it's almost a crossover, it's not a crossover, that I feel I need to jerk and throw stuff on right now. I've made those mistakes enough that I don't have that problem anymore. I'm not wasting money in a day trading mentality. So I apologize if that is offensive, David, but it really comes down to experience. And if we need to talk some more, I will. Roy, Zion isn't currently protected. Why not? Because we've already gotten through our earnings. And again, let's just bring up a chart on Zion's. I have a technical crossover, and we crossed above the 50-day, and we have a technical crossover on the MACD. So my question to you, Roy, is now that we've broken above the 50-day, and we are technically bullish on Zion's Bank, let me go ahead and make this a little easier to see and to read. Call my exponential, change it to a 5-day, and change my range to where it's a little bit easier to see. Let's go out to 2 months. We just broke the 50-day. We've got 2 of our technical crossovers to the upside. So I guess the short answer is, why would I spend money on protection on a technically bullish moving stock? I don't want to put a bearish position on a bullish moving stock. Will it stay bullish? The honest answer is, I don't know. But I went on a swing, wing and a prayer the other day. We had it up to the 40-50. We had our positions. We were moving back up off of a bounce off of the 200-day, and it was coming close to expiration for the positions. So I gave it a Monday bounce. Well, Monday it went up, but it pretty much finished flat. And Roy, to think I was basically looking at this position something fierce. Because if you take a peek at Monday, I've got a doji, right? What does a doji mean? Roy says indecision. Indecision, and David, I'm going to follow David's. It usually means a reversal. It is indecision. Roy and Maud, you are correct, but David's right. It usually means a reversal. When you see a doji, you see a reversal in the direction. So yes, up early, up at 4:30 in the morning my time. By 6 o'clock, futures were up. I was looking at Zion's Bank, worried that, hey, you know what? Yes, I got my crossover. Monday, that was supposed to be people buying back in, it couldn't hold it getting above the previous day high, and we formed a doji. So my expectation, Roy, was that I would be adding long puts back on for a reversal and a bounce down the other way. And up until 12:45 when I jumped on the plane today, I spent my day watching Zions Bank and watching it all freaking day long, worried that what the heck is it going to do today? And the short answer is it was pretty easy for me to sit on it. Pretty easy for it to do okay, and it basically just kept going up except for the very end of the day when it did okay. So short answer is watch Zions Bank all day long. In fact, to show you what I was watching today, because I have a little bit, I spent a lot of time with Disney. I do not have protection on Disney right now. Long puts expired, took some profits, so I was making a decision to see today if it could get above the 108, which is really a short-term resistance level. And sucker literally bounced right off of it. I have decided to wait on putting more protection on Disney only because it seems like it's going to bounce off of an oversold condition. So I'm waiting one more day. Technically, is it bearish? It is, but I have we've had a nice bounce off of 105, ended up taking some profits on our long puts, and I'm watching Disney extremely carefully right now. Not to mention my last watch list, which I'm spending too much time looking at during the day, and I should stop. Ford. Ford just got rid of its CEO. I've got tens of thousands of shares of Ford, and we're just now seeing it starting to move. Couldn't get over, though, yesterday, nice day up, but it couldn't get over and break positive. We do have a preceding indicator on the MACD, but it doesn't mean anything. So I spent a lot of day-to-day watching Ford, rather frustrated that it couldn't climb higher. So good questions, and hopefully I've got those answered for you, both Roy and David. Any other questions? If there's not, guys, have a great week. I will get this posted on my Hurley Investments later on tonight, if not tomorrow, so you can have it again. I hope those that missed last week got the link so you could see the class Tuesday evening. And I'm just kind of spending some time here to see if any other questions come in. And if not, hey, thank you. All right, hey, guys, have a great week, and I look forward again talking to you next Tuesday. You're welcome, Roy. Thank you very much. I appreciate you saying thanks. Bye-bye.